of additional borrowing being reduced from 50,000 crore as notified earlier to 20,000 crore, which means there is going to be a very marginal uptick in borrowing, because 50 is being slashed to 20, which means that 30,000 crore of additional borrowing, which in a sense government announced in December, that gap seems to be getting plugged. Ruchi, where is this optimism coming from? The GST numbers and the earnings projections so far are not telling me that between last announcement and today, government has hit a pot of gold somewhere.
Nikunj, this optimism is perhaps coming from the divestment proceeds, because we at ET Now had also reported that the government is going to really push the pedal on divestment, and looks like perhaps that is somewhere where the optimism is coming from. The Department of Economic Affairs today tweeting that after reassessing their additional borrowing requirements, the revenue receipts that are coming in, and of course the expenditure pattern, the requirement for additional borrowing may just be around 20,000 crore rupees and not as earlier projected of 50,000 crore rupees. Also, remember, we have been saying that how perhaps the RBI has blinked on its additional dividend payout. And we had also said that, if the government gets more money from divestment, if the RBI also gives that additional 13,000 crore rupees, then the 50,000 crore rupees shortfall in terms of, revenues that we were seeing earlier, that could be plugged significantly. And that's exactly, exactly where the government is moving. And the second thing that we need to watch out is that given the fact that now the borrowing is very less, it also means that the government will be on its course to meet the 3.2% fiscal deficit target. And this is an important development that is happening, Nikunj, right ahead of, just 2 weeks ahead of the union budget. The government has been able to reassess the way the revenue receipts are, the revenue projections are, and perhaps a lot of optimism coming in from there.
Yeah, and that also would now perhaps ease those concerns that the government is going to report a large fiscal deficit gap when the budget announcement does come by on the 1st of February, Ruchi. I guess that's going to ease some concerns. But you know what, Ruchi, just stay on the line. We have more questions for you. I'm going to quickly bring on board Vivek Rajpal from Nomura as well. And Vivek, the good news is, that the Department of Economic Affairs Secretary has tweeted saying that the requirement of additional borrowing is now being reduced from the earlier 50,000 to now 20,000. That should ease a lot of concerns, given the way money markets and especially bond yields are moving, and secondly on the fiscal math.
And clearly markets sentiment was very fragile ever since government announced additional borrowing of INR 500 billion. To note, the market was anyways expecting approximately INR 300 billion of an additional borrowing before government announced INR 500 billion extra. So to cut back that additional borrowing to INR 200 billion, I think is a decent relief for the markets.